This meeting is being recorded.
So welcome and thank you for joining us today for the meeting of the New York City Health and Hospitals Audit Committee. Today's meeting is officially called to order. Please note for the record that Dr. Michelle Allen is representing Dr. Mitchell Katz in a voting capacity. I would like to propose a motion to adopt the minutes of the Audit Committee meeting held on October 17th, 2022. Let me ask for your second. Yeah. Let me ask for your vote. Dr. Allen,
Yes.
Frida Wang,
Yes.
Dr. Peña Mora,
Yes.
and Jose Pagan, yes. So minutes approved. So I will now propose a motion to convene an executive session to discuss confidential and privileged matters that may be related to threatened and potential litigation. Let me ask for your vote. Dr. Allen,
Yes.
Frida Wang,
Yes.
Inyoski Peña Mora,
Yes.
Jose Pagan, yes. So thank you, everyone. And I'll ask that only those specifically invited proceed to the adjacent conference room. Let's go there.
and unmute the room, please? It's still muted in the WebEx. YouTube is not hearing us. The room is still muted.
We're unmuted.
Yeah.
Oh, okay, hold on. Star six? Star six?
Here we go.
Go ahead.
Okay. Good afternoon, everyone. Catherine Patsos, Chief Corporate Compliance Officer, providing the report for internal audits. To begin with, an update on the New York City, the New York City Comptroller's Office audit over nursing home medical surgical supplies inventory. We received a follow-up request on September 30th for an update on the status of the recommendations that were set forth in their final report. That update was sent on October 27th, 2022, and indicated that all 4 recommendations were either completed or scheduled for completion by the end of 2022, which would be on target. The next item is the New York State Comptroller's Office follow-up audit of our over our equipment controls. This audit is nearly completed. The field work has been completed. They had issued some findings on November 4th, and we had the closing conference on November 18th. They had visited during the field work Harlem, South Queens Neighborhood Health Center, and Belvis. They had the findings that they had provided us on November 4th and discussed on November 18th included of the 6 recommendations, 2 they found to have been implemented, 1 partially implemented, 3 not implemented. And although they said that they might consider whether recommendation number 3 can be moved from partially implemented to fully implemented. On November 22nd, we submitted a written response to the OSC's findings, and quickly in response to recommendation number 1, that the review asset management system for accuracy and implement a system of continuous monitoring. We thought that that should be changed to partially implemented because of the 20,382 pieces of movable equipment that they identified without tags. 15,516 of them had serial numbers, which could be used to track the assets, as well as using an asset tag on them. Recommendation number 3, regarding communicating policies regarding asset disposal, transfer, and/or tagging to personnel and to ensure they are followed. We did submit evidence that we had updated our policies and processes regarding the asset disposal and transfers, and we communicated those changes by an updated capitalization policy that was shared with the facilities and email communications dealing with the process and policies to be followed. Recommendation number 4, regarding the implementing a formal system to monitor and track assets. This is, we said that we had a tracking system for biomedical and IT equipment that's separate from our asset management tracking, that it tracks for financial reporting purposes, that those will still be tracked, and the others on their tracking systems. However, if something comes off the financial tracking system, it may still be tracked by the biomedical device and IT tracking systems if it remains physically in service. And with regard to recommendation number 5, that is similar to recommendation number 1 regarding the asset tagging and serial number tagging. On the internal audit activities of system-wide review of nurse hiring, the update here is that internal audits has made progress with the field work on the agency nurses, and they've begun working with human resources to access the files for the direct hire nurses. The auxiliary audit process is ongoing. There are no updates from the last meeting. Any questions?
No questions? Any questions for Penioski?
Yes, I have a question about page 7 out of 8. For this auxiliary, what is the common or average lag time from their kind of operations in a year to when the reports are kind of presented officially to us as audited?
It
Because
de-
here we have two that is from
Mhm.
2020, so that's
Right.
almost 2 years. Is that common, or this is
No, it's,
because of COVID?
there are only a couple that have, I mean, Queens Hospital Center is one that has a significant delay. Um, that was held up in part because we were waiting from a determination from the IRS that its restatement of its 501(c)(3) status was going to be retroactive. And also sometimes it takes a while for the auxiliaries to gather the financial data to send to the auditors in order for them to prepare the reports.
So it's usually a year or 2 years, the average delay?
It's usually less than a year because most of the 2021 reports have been completed.
Okay, okay. Thank you.
Sure.
Thank you. Any other questions from board members? Okay.
Moving on to the compliance report. There were no individuals or entities that were excluded from the Office of Inspector General or the Office of Medicaid Inspector General exclusion list, nor were any providers or identified on the National Plan and Provider Enumeration System or the Death Master File. On to the next page. Regarding the HIPAA violations, there were 54 incidents of HIPAA issues that were entered into our case management system. Of those, 14 were found to be violations of our policies and procedures. 7 were not violations. Of the 14 that were confirmed violations, 6 were determined to be breaches. One of them resulted from an after-visit summary being provided to the incorrect patient. One resulted from a registration error where someone was entered into the wrong chart. One was a result of a discharge summary being faxed to the wrong recipient, and one was a result of a form for MetroCard being provided to the wrong individual. Of the 78 privacy incidents that were reported at the October Audit Committee meeting, 21 were still under investigation at that time. Of those, 14 have been closed, and 8 of those were found to be violations, 6 not. Of the violations, 4 were determined to be breaches. 3 of those breaches were a result of registration errors, and 1 was a result of a break into the medical correspondence room. Any questions? Okay. We did receive 2 letters from the Office for Civil Rights. One was dated October 28th, and it was regarding a complaint that the OCR received on March 4th from a patient at Bellevue. That patient claimed that another patient's information was included in their medical record, and that their medical information was included in the other patient's record. The Office of Corporate Compliance investigated this matter and found that there was a registration error on March 2nd, where a patient who was admitted to Bellevue was registered under another patient's name, other patient's chart with the same name. And they created a new chart for the patient who was admitted. As a result, however, the complainant was able to view that patient, the admitted patient's information on their MyChart account, and the complainant's name, medical record number, and date of birth were printed on the identification band of the admitted patient. There were, however, no adverse implications as a result of that misinformation being put on the band. On November 10th, we received a letter that was dated September 14th regarding a complaint that the OCR received on June 5th. This complaint alleged that staff had accessed the complainant's personal information through their child's medical records. We followed up on the complaint and learned that while the complainant's child was in the pediatric emergency room, the complainant, who apparently was an off-duty police officer at the time, displayed a firearm to staff and to NYPD officers. He was ultimately escorted out of the facility by the NYPD officers, and our review of that incident is ongoing. Any questions? Compliance reports. We received 27 compliance reports. 2 were red, 8 were yellow, 17 green. 1 red report was resulting from a workforce member who received threatening text messages from an agency workforce member who was ultimately terminated. The other one involved an individual receiving threatening harm to a workforce member and other patients, that the individual was removed by hospital police. Moving on to page 9. As you know, we have sent out an RFP for billing and coding auditing services. KPMG was the winning vendor. Our contract negotiations are wrapping up with KPMG, and we expect to begin work in the middle of December. We have a kickoff meeting scheduled for tomorrow with KPMG, which I'm very excited about. This has been a long time coming. I'm very happy to have them on board. Finally, the HIPAA risk analysis and security assessment. Coal Fire is wrapping up their 2022 review. Just a couple of reports that are expected to be finalized in the next week or so. Are there any questions?
Questions?
No questions.
No questions. Thank you.
That completes my review.
Thank you, Catherine. So let's move to the next agenda item, which is a presentation by, on the management letter. David Guzman and Grant
Great.
Thornton.
So good morning, or almost afternoon. I'm Tammy Rodinsky. I'm the partner from Grant Thornton. With me, I have Steve Dioguardi, who's our senior manager. We should both be familiar faces to you. I'm just going to really high level go through the key points of the management letter. This management letter is draft, although it already contains management's responses. We've been working together with John and David and James and the entire team. This has been ready for some time, so none of this should seem or sound unfamiliar to you. So as it relates to control findings, our responsibility is to communicate to the board or the audit committee any findings that are of relevant or significant deficiencies or material weaknesses. This year we did have a material weakness, and I'm going to spend my time addressing that. The material weakness this year is over the grant's revenue income recognition. This is a repeat finding in some shape or form. We've had a finding in the grants area. This is our 4th year. This is the 2nd year of this type of finding. And what this relates to is the income recognition and the appropriate controls and procedures that were not in place during the year as it relates to the recognition of your PRF and your FEMA funding, grant income. And this resulted in the finding that raised the level of a material weakness. What happened was grant income and related transactions were recorded subsequent to year end. In addition, related documentation was not provided in a timely manner, which caused significant delays as it relates to auditing the information available for the external auditors. And when we received the information, there were errors, and this resulted in an audit adjustment. So what we recommend is similar to the prior year, that a formal analysis reconciling fund by funding source be performed, reviewed, and approved on a timely or regular basis, including all the appropriate documentation, and that the documentation should ensure that the grant revenues and the expenses are accurately reflected and reconciled to the general ledger throughout the year. So that's I don't know if there's anything that management wants to comment in terms of your response.
Yeah, no, obviously we've taken this very seriously, so we are very committed to rectifying the situation from the control perspective. We are going to put a work group together internally to start working through some of the interdepartmental communication and sharing of information that goes on that we believe kind of played a role in the finding, from a process perspective. So we're committed to do that, and we're sure that we'll get traction going forward.
Perfect, great.
Just
Yes.
1 second, Faniowski, you had a...
No, I think
Frida?
Frida.
Do you want to let finish, or should we do one at a time?
I don't, is it connected to what just happened? Yeah.
Sure.
So, thank you, and it's clear from the report that this is a continued finding. You did mention just now that this has been a finding for many years,
Yes.
but last year's was specifically related to
So the
FEMA
PRF
and
and FEMA funding, obviously that didn't exist prior to COVID.
Right.
But we had some issues and findings related to grants, recognition, and revenue
Okay.
in prior years.
So it's sort of the same thing, but
Same thing, but a different type of funding source, if you want to think about it that
got
way.
it. So that's why you didn't sort of do the historical. in
Right,
your
so what
letter.
actually, not to confuse, but because we had to separate our level of findings, so the
Right.
first is the material weakness, then you go down to significant deficiency.
Right.
In the significant deficiency, we do
Was
talk about
last
some
year's,
historical
but not
information.
not earlier ones.
Exactly,
Okay,
so we
'cause
didn't
they're
go
sort of
back.
different. Got
It
it.
started out as a control finding, then significant deficiency, now we're at the material weakness level.
Okay. And just so I'm clear, this is a reporting and sort of revenue recognition.
Financials are
issue?
accurately, the numbers that you saw in the financials are accurately reflected, and the numbers are correct as they stand today.
Okay, and I don't know that in audit, do you do like evidence of misappropriation or any of that kind of, do you look into that or?
Well, what we did is ensured as part of our detailed procedures, that's why it took a long time to get the information audit,
Right.
to make sure that the FEMA and the PRF fundings were reconciled and reported according to revenue recognition accounting guidance
Okay,
per the audited financial statements.
okay, okay, great. And then on the remediation point, I did know that in your prior year recommendations for the similar, when there was just a significant deficiency and not yet a material weakness, the recommendation was sort of a quarterly analysis. But in your current year's recommendation, you sort of say regular basis. Do you think that should be
I think it's
more
really
frequent?
up to management.
Okay.
It's whatever you determine is appropriate, that it's not anything other than year end. It's probably whatever makes sense. And I know we're going to leave it to management to establish those protocol and procedures between the grants and the finance departments to determine, how frequent that should be performed so that management's comfortable that the numbers at year end will be reflected appropriately.
Okay.
And I'll just say, our view of that, that's going to be ongoing work in many ways, right, that we have to do. But I think it's, I think it's very reasonable for us to be able to quarterly report, right, amongst ourselves and back to the board if
Okay.
asked, yes.
That would be good. And so because I think, sounds like you guys have already started, coming up with a plan, how to remediate, looking at the issues that have been at the root cause of this. If we could get I don't know if that's to the chair, a quarterly update sort of on where things are, I think that would be
Certainly.
good. And there's lots of different areas, right? There's the grants people, there's the controller's office, and maybe finance, revenue
Sure.
collection. Who's kind of in the hot seat, I guess?
Yeah.
Who's leading the charge, other than you, Jim?
Yes, no, I welcome being in the hot seat, right, along with David, and David's been, an excellent partner here. Actually, we have a meeting tonight to kind of just lay out the different points of accountability, right? Ultimately, it comes, back to David and I, but in terms of the processes that we want to make sure that we get right, there'll be, different people, different offices involved, and we want to make sure we have that all exactly right. So I think that'll be part of what we present to you. Yeah.
And for Grant Thornton, what is your expectation, sort of like when someone has a material weakness finding, is that
You don't want to repeat material weakness, so hopefully we've had enough discussion, and I could say we've had many, many hours discussing this
right?
with the comptroller's office, so I'm hoping that we won't be at the same point. What I'd like to do is what we tried to do this year, is during our interim testing, or we could set, if part of your discussion tonight, results in, we can come in, maybe at quarterly and just take a look to see what you've done so that, we're not having the same conversation at year end. It'll just help everyone from an efficiency and process standpoint.
And that
So
is our
whenever you're ready.
plan, right? We will take you up on that offer, right? Because there's no reason for us to wait to the very end, which I think is part of what you've heard here. We need to speed up the process. The communication needs to happen, right, according to a schedule. We are meeting tonight to make sure we got all that, but I think we got, we're already halfway through the year, but we can take a couple of runs with Grant Thornton to see if they see us making improvements.
Okay. And typically, when you've had a material weakness, I'm sure there's no typical, but material weakness finding, does it sort of drop back down to significant deficiency?
Not always. Sometimes if the issue's resolved, it goes away.
Right.
I'd love to be able to say, similar to we've had comments closed from the past that weren't material weaknesses, but it's great. You can go away. There's no, you don't have to step down the ladder
Right.
level by level. You just totally go away. It's addressed, great.
Well, hopefully that's what we'll be hearing about.
Yes.
At the end of next year. I have some other questions on the rest of the report, so I'll wait till you finish.
Okay, I wasn't going to touch on too much. The significant deficiency is similar to the material weakness that we just discussed. The inventory purchase and usage was something that was a finding last year. It's been closed for the current year, so there's no similar issue. And then the last one is a control finding as it relates to the patient accounts receivable, the credit balances. This has also been going on for some time, but it's not material enough that it would raise to any level of higher than the control finding, and it's just that the credit balances they're decreasing, but they still do exist. But what we did determine, as noted here, is that the portion of the credit balances that represent liabilities due to patients is immaterial. So we're not talking about a material amount, and because of the factors that management's working on this and going through and combing through those credit balances, it doesn't raise to any level of significant.
So these are
deficiency or
credit
material weakness.
balances due to the patients or due to H&H, their credit?
It depends. I mean, there's different types, but the liabilities that are due back to the patients is not a significant portion. That's usually what you're concerned about
Right,
and looking
exactly, okay. And,
at. Sometimes they're billing adjustments. There's like all different reasons for them.
right, and this has been hanging around since 2018?
Correct.
It sounds like from the reporting, the trend is getting better. Is that Grant Thornton, is this still a control deficiency for this year?
It's still a control deficiency for this year. I'm just thinking to what Catherine said in terms of, the revenue cycle review. Maybe that would help the process a little bit because that's actually something that management commented in your response is that you're, targeting, I guess, a review of looking at these credit balances in the upcoming year. So hopefully maybe that could be addressed and really get down to the root cause of why they're here, why are they accumulating, or they're actually decreasing from last year, but why are they still in existence?
Okay, so you guys.
Yes.
Part of the same process, yeah.
All right, great.
Ionescu had a question.
Thank you. And actually going back to the material weakness.
Oh, yes.
I have two questions. One is that in your statement you said that there were errors contained in the financial statements before
so
audit.
The issue audited statements are accurate and complete and reasonable. But to get to that point, we were given multiple schedules that contained errors, which ultimately resulted in an adjustment related to the FEMA, not the PRF funding, of about, I think it was $114 million. But at the end of the day, that was recorded by management. So what you see in your financials includes an adjustment that Grant Thornton identified as a result of our review.
Okay. And since we have been having this type of deficiency before, was significant deficiency for 3 or 4 years, in prior years, were there also errors similar, or was this the only year that errors were found and that may have precipitated the use of the material weakness?
Well, there's two reasons for the material weakness. One is the adjustment as a result of the schedules that we were given multiple versions that contained errors. Secondly, it was the timeliness of the reconciliation, and therefore the schedules that we received were very late, 2 or 3 months after year end. In the prior years, I think it goes back 3 or 4 years ago, in the grants revenue, I believe there was an adjustment, but not to this level of materiality. And it wasn't repeat back then. This is really the second year of the PRF and FEMA funding, coupled with the adjustment, coupled with the timeliness, coupled with the errors, that all those different factors, qualitatively and quantitatively, that led to the material weakness, significant deficiency.
So if I hear you correctly, there have been only, in the last 4 years, only 2 instances in which you found errors in the financial schedules that were given to you. I'm trying to understand what you said.
Yes, I don't think the second year there was, I'm just trying to think, I don't have the dollar amounts in front of me, but from what I recall, the level of significance probably happened twice in the past 4 years. That's the 80 million of the grant one, yeah.
So it happened twice, the
Yeah.
errors.
Including this one, including this year.
Yes.
Including this year. So in the last 2 years.
Yeah.
Right.
Now, I think I have a question for management. This information that had this schedule with these values before auditing, what is the normal use of that information and what influence did it have in our decision making to have those schedules with those errors?
I think the schedules support the recognition of revenue. So, it has very detailed kind of expense level information around our spending to support what's been obligated from the grantor so that we could kind of reasonably expect to receive that revenue. So in this case, the schedules that were provided had errors within them. So in reviewing in kind of the back and forth and the timing perspective, we kind of took down, the adjustment actually was necessary because of, identifying the errors. But also, we do feel that there's the presence of expenses that we could have used to support further revenue recognition, but there wasn't enough time to really go through that process to really provide information on those other expenses. So we decided to not even attempt that because we were so late in the game in terms of revenue recognition and closing out the audit process that we didn't want to chance further delays. So we actually decided to recognize less revenue relating to FEMA this year, and then with the possibility of continuing our review, and we will review further in the current year we're in to see if we could recognize more of that revenue as appropriate this fiscal year.
Okay, I understand that part, but in terms of decision making, what I'm trying to understand again, maybe put an example that is totally, finance is not my area, so I may be very naive. Like when you have, looking like a checking book, you think that you are forecasting that you have this amount of money, so you make commitment on buying things or getting into a contract because according to you, you will have this money available. Are these documents that contains $117 million in error were used to make decisions of commitments or expenditures that to money that we didn't have? Maybe I don't know if I'm making sense of my question.
Yeah, I think that there's two perspectives when you look at grant funding. You have what's claimed to grantors, and then you have the financial statement. So, and this has kind of been, I guess, the difficulty I see that we've had as an organization is kind of how do we weave it together, because the rules and regulations around what we claim to grants don't necessarily align to how we recognize those claims on the financial statement perspective. So I think that when you see what was provided in the way of backup, how does that relate to our decision making? We use what we get, for example, from the grants area, for example, in terms of what they're claiming to grantors, what hasn't been claimed yet, so that we look at what was obligated. So in your example, you're talking about you have money available. So from that perspective, we have obligations. So we know we have money available. But to draw down on that, we actually have to have expenses, right, to draw down on those obligations. So the schedules in this process really relate to tracking of those expenses so that when we get that information, we feel comfortable, yes, we do have the presence of appropriate expenses that haven't been claimed before, or recognized before, I should say. Recognized, right? We're talking about the financial statements. And then if we feel comfortable, we recognize that revenue. So we have the ability to recognize, but really those expenses that we have evidence of, that's really the force behind us recognizing the revenue appropriately. And in this case, that part was where it kind of faltered, where the supporting documentation, wasn't exactly accurate in terms of what was being tracked expense-wise, because some of that was used to kind of claim expenses, on the financial statements at other periods of time. But that's not to say that we didn't have appropriate expenses, or we don't have, because we could have backfilled those expenses with qualifying expenses, but we didn't have time, as an organization to do that because of where we were with the audit process. And that's why the reconciliation they're referring to is so crucial that occur throughout the year, and we don't wait for the last minute as an organization, because that's kind of what happened. You run out of time, things are moving about quickly. The level of scrutiny and review sometimes is just not there when you're under such pressures, and no one wants to be in that situation. So, to the point of on the audit front, that analysis of that supporting documentation is what they're referring to should be done regularly. And that's where John and I are coming, with the team to look at a plan around having those schedules put together, having them reviewed, because one area puts them together, but another area has to review them, and that's the controller's area, to make sure that what we're seeing makes sense from a revenue recognition perspective. Because it may make sense from a claim perspective, but to recognize revenue, kind of, it's different. If you can't recognize something, that was, so you can't have support of an expense, right, that was rightfully claimed, but was used to recognize revenue before. So the grants folks might think, oh, this is, a valid expense, and it is, but did we recognize it before as revenue? That's where we have to really look at that more finely as we go forward, and I think that's kind of where you see some of the dissonance in what happened this year.
It sounds like timing is really.
It's all timing.
Yeah.
And that's why I want to ask the question again. Sorry but what I hear you saying is that even though we have that challenge of recognition and documentation of those expenses, that did not impact any decision making in terms of financial kind of work that we do in terms of our operations.
I don't believe so. No, it did
That's
not
what I'm trying to
impact decision
understand. It's
making.
just a matter of
Right.
recognition, but it didn't affect
Correct.
the terms of our financial operations.
Correct.
Okay. So thank you. That is very helpful. So there is no benefit in essence sense to say something or do something different. Is that correct? From the financial perspective. from the operations perspective?
I don't believe there's a benefit.
Okay. Now,
I mean, we all want accuracy, I think, at the end of the day.
yeah, no, I
Right,
said
right,
the
right.
accuracy, but it's
Yeah.
not that it put us in an advantage to, for example, be able to access more money than actually we were entitled to.
No,
You
no.
understand?
no.
Because that's the part that you are
I-
trying to get access earlier to money that you are not entitled.
Yeah.
And I don't think what you're
No,
saying
no,
is
that's
there
more on
is
the
no such
claiming
a thing.
side.
Can I just clarify something that Penny said? This isn't about when you get money, right? This is about kind of when you recognize
Right.
the revenue.
Financial
Right.
statements.
Is that right?
Correct.
So the it's not that we claimed we got 115 or whatever million more than we got. It's just we shouldn't have recognized it right now because
Like, there's criteria that are required to recognize revenue in your external financial statements.
so it's for when you recognize it.
Yeah. I think I understand that there was no.
I just want to make sure we weren't talking about cash.
Right. Thank you.
Getting
Thank you for clarifying.
Because that's important. Am I
No.
getting more money that I was not entitled to? You know,
Right.
that's the.
Right.
I think the answer is not.
Right.
Yeah, that's what I said. So the last question, I think, goes back to what I think we discussed about today's this evening meeting. Do you, as an external auditor, identify these internal controls? You work through all the documentation, work through all the paperwork, and I noticed that your recommendations are quite high level general. Do you provide set of pointed recommendations on things of how things should be done in terms of best practice, or you do not go at that
I mean,
level?
we're happy to work with management in a room and just go through, the same process almost that we followed as external auditors and how we tested it. So, looking at expenses and making sure that those expenses weren't claimed for something in previous years or from a different funding source. So that's exactly, kind of the process that we took just from a high level perspective. We have a whole list of, hundreds of thousands of lines in expenses. We want to make sure that it wasn't recognized previously, either through another funding source or through the same source. So, I mean, we're happy to sit down with management and walk through our schedules. I think, you might already have a good sense of what we've done because I think we've explained it as we've gone through the year, but we're happy to do so going forward.
Thank you. And actually, when you were talking, I don't know if you saw my smile under the mask, but
I can see your cheeks.
I got a flashback because I will tell you an example on when I had that same benefit when I was commissioner of the Department of Design and Construction. The fire department inspections can be quite challenging in a building when you are doing it. And, we were getting a lot of difficulties getting the inspection. So what we did is to replicate internally kind of what the fire inspector will do so that we actually identify things before we invite them to come and inspect. I think what you're saying is something similar, that we can learn like what the steps you do and the rigor that you go through so that we can do kind of similar before you are invited to do the audit.
Sure. I mean, this is not a gotcha type, but we don't have that
Okay.
type of, relationship. We're here to work and help, as you implement. We're happy to, look over your shoulders, work together with you, share some best practices, whatever works for your team.
Yeah.
Thank you. I appreciate it. Thank you.
Okay, any other questions from board members?
None.
Okay, so thank you so much.
Thank you.
Is there any old or new business to come before the committee? Hearing none, the meeting is adjourned.
Thank you.
This meeting is no longer being